bubble burst, the NASDAQ lost 80% of its nominal value. And many of the companies that popped, the dot-com companies, lost 100% of their value. Now, I had predicted this in advance. In fact, when I used to talk to potential clients in 1997 and 98 and 99 and tell them that the NASDAQ was going to lose 80 and 90% of its value, people thought that there's no way that that could possibly happen. I mean, people used to even tell me the government won't let that happen. Well, it happened. A lot of people today in the real estate market have the same idea when I tell them that property prices are going to drop 50, 60, 70, 80%. They don't think it can happen. They don't think the government will let it happen. Well, it happened in the stock market, and it's going to happen in the real estate market. There's very little difference. But anyway, we had the bursting of the technology bubble. Also, that coincided with the election of George Bush. Comes into office, 2000, 2001, and the bubble that happened under Clinton bursts as soon as he's on the job. Now, very quickly to explain business cycles and how they work, contrary to what most people think, the boom is the problem. The bust is the solution. A boom is like an artificial high. Like if you take heroin and you shoot yourself up with heroin and it feels really great. At least that's what they tell me. But anyway, that's artificial. You want to get healthy, right? Then you got to go to rehab or detox, and you go cold turkey, and you go through withdrawal. The withdrawal symptom is very unpleasant, very painful. Again, that's what I hear. But it's necessary if you want to remove these toxins from your system and get healthy. The same thing happens in the business cycle. When you have a central bank, and the central banks made the same mistakes in the 1920s, when you have monetary policy too inflationary, and you create an asset bubble, you create malinvestments, the malinvestments need to be purged. The economy needs to be rebalanced, right? It's kind of like, in the internet bubble, it's like let's say I ran a small restaurant. A circus comes to town, and all of a sudden, there's a lot more demand in my restaurant, and I misinterpret this. There's a false signal. I don't understand where this demand is coming from. So I expand. I hire more workers. I build on to the restaurant, right? I think that there's a real increase in demand. Well, then all of a sudden, they pull up the stakes, the circus leaves town. Now it exposes the malinvestments. Now what do I got to do? I got to fire some people. I got to, sublease some space. We go through a recession, a contraction. That's what's necessary. That's the cure. The problem was the false signals that were sent to me that I misinterpreted during the boom. Same thing happened during the 1990s. We had a lot of investments that were made based on false economic signals. A lot of tech companies and startup internet companies with lots of cash from IPOs were spending that money. That was not real demand. There was no profits there. You had all these companies like Intel and Lucent and Nortel, vendor financing all these companies. I mean, it was all a hoax. It was all a fraud. And when these companies started to go bankrupt and all these malinvestments were exposed, we were going to go through an economic downturn. That downturn should have been very severe. We should have had a very deep recession in 2002. We should have had a recession proportion to the boom that preceded it during the 1990s. But George Bush didn't want that recession happening on his watch. He wanted to get reelected. And Alan Greenspan, far from his Ayn Randian roots from the 1970s, is now a very political person and wanted to help his buddy get reelected. So what did they do? They combined with the worst ever combination of irresponsible tax and spending and monetary policy in our nation's history. Barry talked about the problems in the 1970s. Well, the reason we had the 1970s was because of the 1960s. The 1960s was the Lyndon Johnson, guns and butter administration that had us fighting a war in Vietnam, sending men to the moon, fighting a war on poverty, while at the same time running big deficits to finance it all. Ultimately having to leave the gold standard in the early 1970s, and as a result of all the inflationary monetary policy and the big government deficits that were monetized during the 1960s and 70s, We had oil prices going up 10 times, the dollar losing 2/3 of its value, gold going from $35 an ounce to $850 an ounce. All the problems of the 1970s had their roots in the 1960s. Well, what we've seen with George Bush and Alan Greenspan is far worse than what we saw with Lyndon Johnson and William McKinley Martin during the 1960s. And of course, during the 1970s, America was on much firmer economic footing as the world's wealthiest creditor nation, as a manufacturing power. The fact that now, as an economy, we're in such lousy position economically, what we're about to experience in the decade ahead is going to be far worse than anything that we experienced in the 1970s. But anyway, so the recession that we didn't have in 1982, yeah, technically we had 2 quarters of negative growth. But during that supposed recession, we had record car sales and record home sales. Now, that doesn't sound like any recession that I've ever experienced. Normally in a recession, these things go down. Also, a curious thing happened. At the end of the recession, consumers had more debt than when it began. Now, that also doesn't make any sense for a recession, because in a recession, debt is paid down. People take on too much debt during the boom, they pay it off during the bust. During this bust, we went deeper into debt. Now, what happened? Well, what this irresponsible monetary and fiscal policy did was to create the biggest consumption binge in world history, where American consumption, now greater than 70% of GDP, kept us from really having a recession. But all it did was push off the recession to some later date, after the re-election of George Bush, which is what they really cared about. We don't care if we create a bigger disaster. We just want to have a bigger disaster later, because then somebody else might be in office. So this is what they did. And so even though we had a downturn in the capital goods sector, the consumer went into debt and basically pushed off this recession until maybe starting in 2007. But it's going to be far worse as a result of all the unproductive debt that has been accumulated during the last 7 years. We are now running trade deficits of $65 billion a month, over $850 billion a year in debt. And what are we borrowing this money for? We're not borrowing it for the same things that we borrowed it for as a nation 100 years ago or 200 years ago. We're borrowing money to buy imported consumer goods. We're buying money for non-productive, depreciating consumer goods. Or we're borrowing money to just buy food or gasoline. We're borrowing money to take vacations, to remodel our kitchens, to put granite countertops in there. All this stuff is going to have to be paid. American consumers are now loaded up with debt. And the very nature of that debt, a lot of people in this room understand that because you're in the mortgage industry. You know how many people own adjustable rate mortgages, and how many people have been able to extract equity from their houses as they've been appreciating. See, the dynamic behind this whole perverse situation was that as Americans spent money, we sent dollars abroad to pay for all the goods that we could no longer produce ourselves, foreigners were accumulating their IOUs. Because since we didn't have any goods that we produced that the Chinese or the Japanese wanted, they were stuck with all this paper. And so their central banks kept buying it. And what did they do with that, with the dollars? They bought U.S. treasuries. They bought mortgage-backed securities. They kept interest rates artificially low. Because in America, we should not have low interest rates. We've had negative savings rates for years. We have hardly any savings. Interest rates are the supply and demand of money. So we have minimal savings, and everybody's trying to borrow. Interest rates should be high. Why aren't they high? Because the rest of the world is loaning us their savings. And that's what kept interest rates low. But as money kept coming back to the United States and buying our mortgage backs and buying treasuries, that kept real estate prices rising. The higher real estate prices rose, the more money Americans could borrow against their houses, the more imported goods we can afford to buy, the more dollars we sent abroad, and it was a process that kept perpetuating itself. And now, of course, the Chinese have over $1 trillion in foreign reserves. That's just the Chinese. The Japanese